Alright, hi everyone, welcome to today's webinar, which will be the live analysis session. Alright, just want to make sure you guys can hear me loud and clear, and you can see my screen as well. You should be seeing IC Markets webinar live analysis session 25th September. Right, do remember, you can drop all your requests in the live chat box here. So if you have any requests on any analysis for any of the major currency pairs, commodities, or indices, please do drop your questions in the chat box over here. All right, okay, so as usual, before we start, let's go through the disclaimer. Right, okay, so this is marketing communication. It does not contain or should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for transactions in financial instruments. The analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objectives, investment strategies, financial situation, or needs. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. All right. Okay, so my name is Ketan Ramachandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for the best FX and equity research for the following years, 2019, 2020, and 2021. All right. So before we kick things off, here are some of the key economic events to look out for this week. We had a surprise speech by BOJ Governor Kazuo Ueda this morning at about 5:30 a.m. GMT. This was completely unannounced or unscheduled, and it caught markets by surprise as well. Then we also had the German iPhone business climate being released this afternoon, or rather during the morning of the European session, which shows that Germany's economy is still deteriorating, and that does not bode well for the wider Eurozone economy. We've also got ECB President Christine Lagarde speaking later this evening, and we've got Australia monthly CPI, US GDP price index, and unemployment coming up later this week. All right, okay. So just to quickly recap what happened this morning. Early this morning, so we had this unexpected or unannounced, unplanned speech by Governor Kazuo Ueda, who delivered a speech on Japan's economy and monetary policy meeting at a meeting with business leaders this morning. All right, hi HMH, good to see you again. All right, so basically, the Bank of Japan have judged that to achieve sustainable and stable achievement for the price stability target of 2%, which needs to be accompanied by wage increases, has not come in sight yet. So because of this, they're going to continue further with monetary easing under the framework of the yield curve control, or the YCC. So basically, just to summarize, this is a very dovish speech by him, and which means that the Japanese yen is likely to weaken further, and that means currency pairs such as the dollar yen will be rising. Right, then we also had the German iPhone business climate. This is for August, so you can see conditions across all the sectors, manufacturing, services, trade, and construction, have been going lower. Let's see what the latest result is. So this was for August. Let's see what the latest result for September is. Right, so note it's pretty much unchanged. If you look at Forex Factory, the forecast was for 85.1. It actually came in a little bit better at 85.7, but which was still slightly lower than the previous month's reading. So business conditions in Germany are not looking that great. The current assessment and future expectations are not good. So this generally doesn't bode well for the wider Eurozone economy. Right. So this should be generally pretty bearish for the euro as well. Right. Yeah, okay, so this was August data. Well, let's not look at what August data is, but if you go to the website here on Forex Factory, you can read in more detail about the specific sectors and how they have been performed, or how they performed for the month of September. Right, then let's quickly look at ECB President Christine Lagarde is due to testify before the committee today. So after last week's hawkish FOMC statement and press conference by Chairman Jerome Powell, the euro dived sharply, right? So now could President Lagarde's testimony provide some lift for the euro? We have to wait and see how that plays out. So do take note of this event as well. And we have Australia monthly CPI. We can see the monthly CPI has been decreasing pretty steadily, and we expect the latest reading to show further decrease. So that means the Aussie dollar is likely to weaken on Wednesday 27th as well. Well, this is if the data comes in lower than the forecast, and of course lower than the previous month. So that would mean this would be bearish for the Aussie dollar, right? We also have US GDP coming up. There's no major changes with regards to the forecast. It's expected to come in at 2.1% again. So I think there should be no surprises there. But we do have PCE price index to be released. So this is the Federal Reserve's preferred measure of inflation. And if we look at the CPI data for August, we can actually see June CPI bottomed in June at 3%, but for July and August it started to pick up. So we actually see inflation, at least at the headline CPI reading, accelerating once more. So this doesn't this is not good, in the sense of course, we don't want inflation creeping back into the markets, and also this means that the Federal Reserve is likely to remain hawkish and even perhaps raise interest rates once more. So if we have a PCE price index reading that shows August data accelerating as well, this is going to act as a bullish catalyst for the dollar index. So this will be on the 28th of September, Thursday. So do take note of the PCE price index, because this is going to be a pretty important or widely watched news event that was going to take place later this week. And finally, we have unemployment claims in the US. This is a weekly number that's released that measures that tracks the number of people filing for unemployment benefits in the US. So if you have data like this, where the data is coming in lower than the forecast, the blue bars are the actual data, the yellow bars or the orange bars are the forecast. So in this case, over the last 5 weeks, claims have been coming in lower than the forecast. This means that the labor market is resilient, and that means this usually acts as a bullish catalyst for the dollar index as well. So just to take note, if you have PCE price index accelerating for the month of August, and we also see claims coming lower than the forecast, we have two potential bullish catalysts for the dollar index. All right, okay, now let's head over to TradingView. Do take note, okay, I'm on GMT time, so these are the main economic events to look out for today, or this week rather. So do take note of that, along with whatever I've mentioned as well. I've also mentioned, okay, ECB President Lagarde speaking at 1 p.m. GMT time today. We have Australia CPI coming at 1:30 a.m. GMT on Wednesday 27th. Then we've got US GDP as well as the where's the PCE price index? Thought I saw it here. Oh, sorry. Okay, GDP is on Thursday, 28 August, along with unemployment claims. So unemployment claims and GDP coming out on Thursday, 28 August. And then Friday, 29 August, we've got PCE price index. All right. Okay. And for those who may have missed the pre-market live analysis with Desmond this morning, this is the link. I'm going to copy it and paste it into the live chat here. So you may, for those who have missed it, you may watch this repeat video after this webinar. All right, just for those who would like to catch up on the pre-market analysis, where Desmond would had covered the analysis on the major pairs and commodities on the daily time frame. Right, so you get a much better outlook for the week, where the major support and resistance levels to watch out for the whole week. Right, and now we're going to dive into TradingView, and we're going to do the analysis on the 4-hour time frame. Right. So we would look at levels that are more actionable for us to identify. All right. Okay. Hi, Jamilu. Good to see you as well. All right. So just before we go into the 4-hour chart, okay, right, just let me adjust camera as well. Right. This is a little bit better. Yep. Okay. So if you just zoom in, or not zoom in, zoom out a little bit, and we go onto the weekly time frame for the dollar index. we can see the dollar index has had a very strong rise since middle of July. So we've had 10 consecutive weeks of strong gains for the dollar index, going from 100 to as high as 105.90 last week, pretty much, right? And this week, after pulling back initially, the dollar index is rising strongly as well. Combination of hawkish FOMC statement last week and a press conference as well, where Chairman Jerome Powell was once again very hawkish in his statement again in this press conference. All of this pointing to or rather all of these acting as bullish catalysts for the dollar index. Despite the Federal Reserve not raising rates last week, Chairman Jerome Powell's words, as well as statements by the other Fed officials, are actually driving the dollar index higher. All right. Okay, so this is what we're seeing on a weekly time frame. Price has broken through what was previously a significant swing high resistance at the end of May at 104.25. We broke above that very cleanly in early September, and after that, the next weekly swing high resistance was in at the end of Feb at about 105.30, which was broken cleanly last week as well. So you can see how strong the move in the dollar index has been, and we've had 10 consecutive weeks. Do take note. Although yes, we've had a couple of weeks where we did see strong pullbacks, but in general we've had 10 strong weeks of gains for the dollar index, and it looks like so far this week is not going to be any different. But do take note, we do have a very strong major resistance coming up at about where the 127.2% Fibonacci extension level lies, which is at about 106.15. Right, this is on the weekly time frame, just to get some perspective on how strong the dollar index has been trading, or how much it has moved since mid-July. All right, okay, here we are on the daily time frame. So these are levels that were identified this morning, right? If you had managed to tune in to the pre-market live analysis with Desmond, but as I mentioned, you can catch it. You can watch the replay here. I've dropped the link in the chat box. All right, okay. So as you can see, the levels, first resistance, you can see price is already currently testing the first resistance at 105.68. We see price making a significant swing high resistance here on 14 June, then finding support here on 5th of August, finding support again 17 November, then resistance again on 9 Jan as well as 9th of March. So you can see multiple instances where price has bounced off this level, be it as a resistance or support. So that's how we've identified this as a major overlap resistance level. And we also have the 127.2% Fibonacci extension level to help us, to guide us as well. So how did we find this extension level? We used the Fibonacci retracement tool. We started from this swing high here on the 30th of May. 31st of May, ending with the swing low on 14th of July. So when you do the retracement like this, pull the retracement like this, and we use the 127% Fibonacci retracement. We also did another Fibonacci retracement on this part of the move from this swing high here on 30th of June, ending with the swing low on 14th of June. For this retracement, we use 161.8% Fibonacci extension. So we've got a confluence of Fibonacci levels here. Now, what do we mean by confluence? Confluence simply means there's more than one Fibonacci level at that particular price point. Now, this could be a retracement level, an expansion level, or extension levels, or any combination of the above, right? But in this current situation, we have a confluence of Fibonacci extension levels. So we've got the 127 and the 161% Fibonacci extension levels aligning at a very similar price point. So this is how we've identified the first resistance on the daily time frame, which is also very applicable for the first resistance on the 4-hour time frame. All right. Okay, let's see. Now let's zoom in onto the 4-hour time frame now and see exactly where can we identify the other levels. All right. So for the 4-hour time frame, to identify the second resistance, instead of it being up here, I would just simply use, do take note, this second resistance is for the daily time frame, but now we're going to try and identify levels on the 4-hour time frame. So for the 4-hour time frame, where we see the Fibonacci confluence take place, that's where we're going to identify the second resistance on the 4-hour time frame. right? We see the extension of 127% and 161% help us identify a major confluence area which could potentially act as a resistance for price should dollar index break above 106 this week, right? Okay, first support and first resistance is here, that was at 105.68. No changes to that. All right, now what about um, the first support? Let's see if we can identify something closer. We see price currently pulling back, so maybe it might be worthwhile to use a Fibonacci retracement. So we'll start from this swing low here on 18th of July, going up to the swing high here on 22nd of September. Let's pull up all the fibs and see if there's any levels that can help us guide us for support levels. All right, okay. If you just look at where the 23.6% Fibonacci retracement level lies, uh, or no, 23.6 is here. So, but I also see a pretty decent pullback here that took place on 20th of September, as well as a little bit of resistance here on 13th of September. So I think on the 4-hour time frame, to identify a price level, support level is a little bit closer to where price is currently trading, I would use this level here at 104.81 and identify that as my first support on the 4-hour time frame. And then what was the first support on the daily time frame, we can use that for the second support on the 4-hour time frame. And also we're going to keep the 23.6% Fibonacci retracement level, because that lines up very well with the overlap that we had identified earlier. So let's just keep that, adjust my labeling. Right, so here we go. So this is how we've identified the first and second support levels for the dollar index on the 4-hour time frame. So just to recap, we see a decent overlap level here at 104.81, and of course we see a very strong overlap at 104.34, which also aligns with the 23.6% Fibonacci retracement level. Alright, so do take note, these are the key support and resistance levels for the dollar index on the 4-hour time frame. Right, so naturally, if we are seeing dollar index rise very strongly since middle of July, then naturally we're going to see the euro falling, which is what we see right here. So just before we dive into the 4-hour time frame, let's look at it on a daily time frame. You can see price has really dropped from about 1.1245 all the way down to 1.0636. So it's been 10 consecutive weeks for of losses for the euro as well. And now price is currently testing an intermediate support level at 1.0636. We can see price making a pretty decent swing low bounce here at the start of June. So we're going to use this level use this level to help us identify a potential intermediate support on the daily time frame. And of course, for the first major support, we see a strong pullback support that took place on 6th of Jan, as well as at the end of Feb and early March. So that's how we've identified the first support at 1.0512. Again, this is for the daily time frame. Now let's zoom in and see where we can identify more actionable levels based on the 4-hour time frame. Right, okay. So of course, no changes to where let's fine tune this a bit. Okay, no changes to where the intermediate support is. So the intermediate support for the 4-hour time frame would still be on at 1.0635. No changes to that. With regards to where the first support is there any other level? No, there's no other major level. So what is applicable on the daily time frame as the first support, we can also use that for the 4-hour time frame, right? Because we don't see any other major strong levels. Let's see if there's any extension levels that we can use. Let's see. Right. Probably we can just keep 161 as a guide. Right. So I did a Fibonacci retracement starting from this swing low on the 6th of July, ending with a swing high on 18th July. I'm using the 161% Fibonacci extension level to help me identify a potential support level for price for the euro. Right. Although we don't see any other nice overlap levels here, the next nice overlap or pullback level is at 1.0512. but do take note of where the 161% Fibonacci extension level lies, because if this intermediate support at 1.0635 doesn't hold, we can probably expect price to find a little bit of support around the 161.8% Fibonacci extension level. Now to the upside, let me see. We can see price also. Yeah, we can also see there's another intermediate like resistance level here at 1.0666. You can see price finding a little bit of support here back in early June, and then after that, we can see since last week it found it pretty difficult to break above this level last week as well. So, right, so we've identified an intermediate resistance at 1.0666 on the 4-hour time frame, and then I think the first resistance that was identified for the daily time frame is probably applicable for the 4-hour time frame as well. So these are the more actionable levels for us to identify and to take note of when we're trading the euro this week. Oh well, today rather, for today. And also, I think there could also be a case for a descending trend line. Yeah, you can argue, well, we already had 2 touches here. As you can see, there's probably a decent case for descending trend line as well. You can see price coming close to this trend line in the past and then touching it here on 30th of August and then once again coming pretty close to it on 20th September as well. So we do see a case for a descending trend line as well for the euro. Alright, so do take note of the immediate support and resistance levels for the euro. Intermediate support at 1.0635, intermediate resistance at 1.0666, first resistance at 1.0765, and first support at 1.0512. Alright. Okay, next we'll move on to the pound. Alright, if there are no, for those who may be just tuning in, do drop your request for any analysis that you may have in the live chat box. I'll be more than happy to go through it with you. Otherwise, I'll just go through some of the majors, then we'll touch on gold and oil as well. Alright? So do not hesitate to drop your requests for any analysis in the live chat box. Alright, now moving on to the pound. Last week we had FOMC, we also had the Bank of England releasing their monetary policy decision. FOMC, Federal Reserve, did not raise rates, but the statement and press conference was very hawkish. Bank of England didn't raise rates as well, and this was very unexpected because markets had originally priced in an increase of 25 basis points to bring their official bank rate up to 5.5%, but they didn't do that. They actually kept rates on hold, and that also triggered, combined with a hawkish Federal Reserve, that triggered a big strong move last week as well. Right, so this is the daily chart for the pound. You can see since mid-July as well, of course, it's been trending lower. It's been falling very sharply. First resistance is where this previous swing low bounce took place at the end of May. So 1.2311 is the first major resistance. Second major resistance has been identified by this decent overlap here at 1.2052, which also aligns closely with another confluence of Fibonacci levels. We have the 78.6% Fibonacci retracement level as well as the 127% Fibonacci extension level. Second support has been identified by this multi-swing low bounce here that took place on 6th of Jan as well as on 8th of March. Now, let's dive into the 4-hour time frame and identify more actionable levels, should there be any. Right, this really is okay. If I do zoom in here, you can see that this price level at 1.2196, you can see a pretty strong overlap here that took place. Where was it? 1.20. Oh, yes, around here, right? Yep. Right, we did see price. You can see price running into resistance here in the middle of March, and then once it broke above it, finding support on 21st of March and 24th of March as well. So this does look like a pretty decent overlap level as well. And if I were to stretch it all the way to back here, you can see that as well. But I think probably this should be sufficient here. Right, let's zoom in, fast forward to where we are. All right, so I think we can use this as an intermediate support level for the pound on the 4-hour time frame. Support dotted, right? Okay, so no changes to where the first support is, but intermediate support, we found a strong case for an intermediate support level at 1.2193, because we see a pretty decent overlap here that took place at the end of March, right? So no changes to the first resistance. I think for the 4-hour time frame as well, the first resistance 1.2311 is a pretty good level as a resistance, because we don't really see any other major overlaps. Or you could say, okay, if I look here, price did make a pretty strong swing bounce here on 3rd of April. I think we can use that as an intermediate resistance level, right? Okay, so we've identified two intermediate levels here. One is the intermediate resistance level at 1.2275 and another intermediate support level at 1.2193. Okay, so these are the levels to watch out for the pound. No changes to the first resistance or the first support. Yeah, pound still looks to be in the free fall, but of course, let's see what dollar index is doing. Yeah, dollar index is pulling back as we speak. This is potentially a major resistance area for the dollar index, so we can expect price to at least stall around this level. So that means we are likely to see the euro retrace a little bit higher, as well as the pound retrace higher as well. So do take note of the resistance levels for the pound on the 4-hour time frame here. All right, next is dollar yen. Right, as we mentioned, we had an unplanned speech by Governor Ueda from the Bank of Japan, right? And overall, his speech and his statements were relatively dovish. So that means the Japanese yen is going to weaken. So that is what we are seeing here. We see dollar yen rising, and if we look at the crosses as well, I think we should be. Yeah, we also see euro yen rising, pound yen rising as well in general, right? So you can see in general the Japanese yen is pretty weak today, and we can expect dollar yen and all the other yen crosses to move higher as we speak. All right, okay. Now here we are on the daily time frames. Okay, so we can see just when we zoom out a little bit, we can see exactly where the major resistance levels are. So we can see price making a pretty significant swing high here on 31st of October. So this is a major resistance area as well. But price is currently breaking above it as we speak. So this is very likely this first resistance on the daily time frame is now going to act as a potential pullback support. So let's see how the day ends, and when when we start on Tuesday again, this first resistance at 148.42 could very well be a new pullback support level. All right, we've also used the 61.8% Fibonacci projection level to help us to add significance to this swing high resistance. Let's see where the 78.6% lies. Right, okay, 78.6% lies quite close to where the second resistance is, so I think we can highlight this zone. Right, so do take note of the 78.6% Fibonacci projection level as well. So should price continue to go higher, we may see strong resistance coming up, maybe at 151st, of course. And then should price continue to go even higher, then the next resistance would be starting from where the 78.6% Fibonacci projection level starts from. All right, now what about the support levels, right? Are there any more closer support levels that we can try and identify? Okay, let's look at it on a 4-hour time frame. Right, okay, this is wave 5 Elliott wave theory. So we can see price pushing higher. So wave 5, you can see how price structure or market structure has followed the Elliott wave theory pretty well and is playing out quite nicely as we speak. All right, I'm just going to remove this here so that when we go in on a 4-hour time frame, it's a little bit cleaner and a little bit easier to try and identify a major support level that's more actionable on the 4-hour time frame. Right, okay, if you go back, alright, so price action, priced, okay, I do see a pretty decent overlap here at 147.46. Perhaps you can use this as an intermediate support level on the 4-hour time frame. Right, you can see price running into resistance in the middle of September, and once it broke above it, it found support on 20th of September as well as on 21st of September last week. Right, so we can see what we're trying to look for is strong levels of supply and demand, and to look out for those overlaps as well. So we see 147.43 as a pretty decent overlap level, and that's what we are using to identify as the first as the intermediate support for the 4-hour time frame. Right, okay, then in terms of the first support, all right, what is identified on the daily time frame is a little bit far from where price is currently trading. I do see a nice swing bounce here that took place on 11th of September. This is a pretty significant swing bounce here. So I'm going to use this level to help me identify the first support at 146.14. And second support, I would use this pullback level here that took place on 23rd of August as well as on 1st September, which is at 144.57. So that's our second support level for dollar yen on the 4-hour time frame. Alright, hi Kelvin, good to see you as well. Alright, for those who are just joining us, do not hesitate to drop your request for any analysis that you may have, and I'll be more than happy to go through it with you. Alright, so as you can see, price is currently breaking above a major resistance, so you can see a pretty significant swing high resistance that took place last November. That also aligns very well with the 61.8% Fibonacci projection level. So now, as I mentioned earlier, very likely this first resistance is now going to act as a potential pullback support level by the time Tuesday, by the time we kick things off on Tuesday. Okay, so do take note, first resistance here, which is going to be potentially be a pullback support. Then if price continues to go higher, you can see price making a swing high here as well, a very small swing high here. I would like to use this as a intermediate resistance, because I'll explain this why this would be the case, because should this first resistance now become or should this first resistance become a pullback support tomorrow, then I would like to use 148.79 as a potential intermediate resistance level, and then the first major resistance would be, we'll try and see if we can use any other projection levels as well. Yeah, we can try and see, we can do a Fibonacci retracement level here, although this is not a very big move. But let's see, we can probably use the 161 as a guide, right, in the future for tomorrow. Right, okay, so we'll just keep 161 up here, and we can see this intermediate resistance at 148.79. Alright, okay, so these are the more actionable support and resistance levels for the dollar yen, right? Do take note, yen is very weak today, and that's likely to play out for the rest of the week as well. So do take note, dollar yen is expected to remain elevated, perhaps because of the recent surprise speech that Governor Ueda made this morning. And what else? Oh yeah, and expect the yen crosses to climb higher as well. Alright, okay, so this is yen. Let's go on to the Aussie. Right. So at the start of the day, the Aussie and the Kiwi were both two of the weakest currency pairs this morning, but now they've managed to find some support, and they are climbing higher now as the dollar index pulls back. So do take note, for Aussie, let's see. Okay, let's zoom in 4-hour time frame. I think we can do see Fibonacci retracement here. 61 here. Alright, so let's just keep 61%. I do another extension. Maybe I can use a projection here. Let me see. Right, okay. So on the 4-hour time frame, just let me zoom in a little bit so we can see how we identified these levels. Okay, so what I did was I used the Fibonacci retracement tool, starting from the swing high on 20th of September, ending with the swing low on 21st of September. I'm using the 61.8% Fibonacci retracement level because it lines up very well with the recent swing high that took place last week. Then I also used a Fibonacci projection level. So I used this projection starting from this swing low, 21st September, going up to 22nd September and ending on 25th of September. We see the 61.8% Fibonacci projection level lines up very well with the 61.8% Fibonacci retracement level. So this is what we call confluence of Fibonacci levels. So we can use this to identify uh, the first resistance on the 4-hour time frame. And I think what we had identified on the daily time frame as the first resistance can now be our second resistance for 4 hours, and this one up here will delete it. All right, okay, just to summarize, I'm on the Aussie dollar 4-hour time frame. First resistance for Aussie dollars at 64.61, which aligns with the swing high resistance as well as confluence of Fibonacci levels. The first resistance on the daily time frame for the Aussie is now going to be used as the second resistance. And for the pullback, we can see, okay, we see a pretty decent pullback level here as well. So this level here at 63.93, you can see price finding support here on 13th of September as well as 21st of September. So this is a pretty strong pullback level, which we are going to identify as our first support. And the first support that was identified on the daily time frame will now become the second support for the 4-hour time frame, right? So these are the more actionable levels for the Aussie dollar on the 4-hour time frame. All right. There's a question by Flavio. Is there a possibility of IC Markets offering trading view to us? Right. Okay. For this, you'd have to contact customer service at IC Markets directly and put in this request to them. They'll be in a position to really give you the best feedback on how they can probably try and work something out for you guys. All right. Do take note. Yeah, just check in with IC Markets customer service, and someone will definitely get back to you on this. All right. So that's the Aussie. Let's quickly look at the Kiwi. So daily time frame first, we can see price is pushing up towards the 23.6% Fibonacci retracement level. There's a strong resistance level. We see price making a swing low bounce here on 31st of May. Then when after price broke below it, found a little bit of resistance on 23rd of August as well as end August and early September as well. So that's how we've identified the first resistance at 59.96, which also aligns with the 23.6% Fibonacci retracement level. All right, okay. First support here is the swing low that took place on 6th September, which is at 58.61. No changes there. Second resistance is at 38.2% Fibonacci retracement level. Right, now let's zoom in into the 4-hour time frame. Right, okay. I think no changes to the first resistance. We'll keep the daily first resistance as the 4-hour resistance as well, but I would like to add in an intermediate resistance level here. We can see price making two swing highs here, so multi swing high here on 20th of September as well as on 22nd of September. So this level here at 59.83 would be an intermediate support resistance level for the Kiwi, and price is currently pushing up here as we speak. Now we can see also price making quite a strong bounce here, so I would like to highlight this as an intermediate support for the Kiwi. So this is at 59.48, and then if I come down as to 58.96, we do see a very strong pullback level here. So I like to identify this as the first support on the 4-hour time frame, and this first support that was identified on the daily time frame will now become the second support. Right? Okay. So this is how we can see how we've identified the levels. We can also use a Fibonacci retracement tool. I think we can do this from this swing low here, 21st of September, going up to the swing high on 22nd of September. Let's pull up all the fibs, see if they line up with any major levels. Right, we can actually see price being close to where the 50% is, so we'll just keep 50%. Anything else? 61. No, I think we'll just keep 50%. and we'll just highlight this as a zone here. So we do see a pretty strong case for a decent support zone for the Kiwi at about 59.40 to 59.50. Right. First support is at 58.96. Second support 58.61. First resistance at 59.96. All right. Okay, so these are the key resistance levels for the Kiwi on the 4-hour time frame. All right, now let's go on to gold, and then we'll go. We'll end up with. We'll round up with crude oil WTI. All right. All right. Okay. With dollar index being strong, gold has been actually pretty choppy. Uh, there have been periods when, uh, of course, with dollar rising very rapidly, we are expecting gold prices to fall as well. Do take note of the negative correlation uh, that exists between the value of the US dollar and gold prices as well. So if the US dollar is rising, generally gold prices should be falling, and vice versa as well. So as we've seen last 10 weeks of strong gains in the dollar index, uh, we are also seeing some weakness in gold, but we can also see that despite the 10 weeks of strong gains in the dollar index, gold has actually been pretty choppy as well, right? It's not been just trending lower in a steady fashion like what we saw here. See what we saw here at the end of July till 17th of August, 3 weeks of a very strong bearish downtrend here. But what we are seeing now is a little bit of choppy action for gold, right? And if we zoom out a little bit, right, let's see on the daily time frame. How does this look on the daily time frame? Try to see this descending. Okay, so right, so on the daily time frame, we can see that we have a pretty decent case for descending trend line. Price touching this trend line here on 1st of September as well as last week 20th of September. So we've identified this trend line here because if should price break above this level and manage to stay above 1930, then we could have a potential bullish breakout for gold prices, right? So that's why we've identified this descending trend line here. So do take note of that. And if we look at it on the 4-hour time frame, it's a little bit messy on the 4-hour time frame with regards to the with the descending trend line, but do take note is actually a pretty important trend line on the daily time frame, right? On the daily time frame, we can see this much more clearly, and we can appreciate it. We can appreciate the significance of this descending trend line even more, right? It's just that on the 4-hour time frame, it doesn't look very clean. All right, okay. Now what about now? Okay, so of course, if dollar index is falling, it's quite likely we are going to see gold push higher for the rest of the day. Now, where are going to be our more actionable levels? All right, we can see price finding support here last week. So this is a pretty decent swing bounce here. So I think we can use 1914 as the first support on the 4-hour time frame. And for the second support, I would use this pullback level here as well at 1901. So that's the second support level for gold on the. If we pull it back all the way here, we have a pretty decent overlap as well. Yeah. So you can see price finding support, resistance, resistance, and then support again. Right. So you can see a pretty strong overlap here at 1900, which we are going to identify as the second support. Okay, first support is the swing bounce here that took place on 21st September. Now, what about first resistance? I think with regards to where the first resistance was identified on a daily time frame, I think that's fine. We can keep that for the 4-hour time frame as well. We do see, if we zoom in here, we do see price finding a little bit of resistance here on last Friday. I think we can use this level here at 1928 as an intermediate resistance level. So should price break over this, we can see a pretty nice intersection with the descending trend line. So if price does break above these two levels or these two trend lines, then it's quite likely we may have a case for a bullish breakout for gold prices and potentially push up towards the first resistance at 1942. All right, let's see if we can use any Fibonacci levels. Right, we've done Fibonacci retracement here. We see 38%. Any other levels? No. Okay, so we are going to keep 38% and intermediate resistance at 1928. All right, okay. So these are the support and resistance levels for gold on the 4-hour time frame. All right. Next on, we'll move on to crude oil or WTI. So, all right. As we approach towards the end of today's webinar, right? Do take note. Please drop your requests in right now. So actually, we have time to for me to go through them, right? Do not wait to the last minute to drop any requests that you may have for any analysis on any of the other currency pairs or the indices, right? Do drop your request right now so that we can actually have time. So we can actually have time to go through it. All right. Okay. So here we are on the chart for crude oil. So I'm on the daily time frame. So similarly, uh, crude prices have bounced very strongly since the end of June due to a combination of tighter supply. What do I mean by tighter supply? I mean by production cuts led by Saudi Arabia and Russia and the wider OPEC Plus group. So when you have less supply coming into the markets, this tends to drive up prices, especially with demand being relatively strong over the US summer. Right, we saw strong drawdowns in US oil inventories over the last 5 weeks, which has also pushed oil prices higher as well. So the combination of production cuts led by OPEC Plus and then the increased demand over the US summer season has propelled crude oil prices, and we had WTI breaking above $19 per barrel for the first time since November of last year. So it has broken very significant resistance levels. The first major resistance level was at 84.50, and then now it ran into the next major resistance level at 92.27. All right, thank you very much for your comment, HMH. Very kind words. Thank you. I try to overlay a little bit of the fundamentals with the technicals as well, because it gives us a little bit more perspective, and also helps us to appreciate the moves that we are seeing in markets currently as well. All right, okay. So this the support and resistance levels on the daily time frame. Right. Let's see where the more actionable levels. So let's zoom in onto the 4-hour time frame now. Right. Okay. So we have a Fibonacci retracement here. Let's just adjust this retracement level. Right. So this retracement level here began on starts from this swing low here, 23rd of August, ending with a swing high on 19th of April. Let's pull up all the fibs. Right, we can see there's a pretty decent overlap level here, close to where the 23.6% lies as well. So I think for the 4-hour time frame, we can use this as an intermediate support level. And then what else? Is there any other? We do see another decent overlap here. Right. So okay. So I'm going to use this. Okay, just let me tidy everything up a little bit, and then I'll recap with you what we're doing here. All right. Okay. So we're going to keep 23, 38, and 50% Fibonacci retracements. All right. Okay. So right, we use the Fibonacci retracement tool from this swing low here in August, going up to the swing high here in 19th of September. We do see the 23.6%, 38, and 50% Fibonacci retracement levels line up with some key overlap levels as well. We see this level here at 88.70 price bouncing off this level several times recently, and it also lines up very well with the 23.6% Fibonacci retracement levels. We're going to identify 88.70 as our intermediate support. First support at 87.05 is this pullback level here. We see price running into resistance here previously in early September, then after it broke above it. So this is now going to act as a potential pullback support, which lines up pretty close to where the 38.2% Fibonacci retracement is. Now this second support here was actually identified as the first support on the daily time frame, which lines up well with the 50% Fibonacci retracement level too. So we're going to use this first support on the daily time frame and relabel it as the second support for the 4-hour time frame. All right, hi Manaya, thank you for the kind words as well. All right, thanks up, thanks Raja. All right, yeah, sometimes due to some scheduling conflicts, sometimes uh, we may not get the correct presenter's name on time because due to some last minute changes. But otherwise, yeah, thank you for the feedback. We'll definitely keep an eye out for that, and we'll try and update the names accordingly when we put up the webinars. All right, thanks up. All right, okay, so okay, no changes to the first resistance on the 4-hour time frame as well. We also have the 78.6% Fibonacci projection level. This projection was found from here, starting on this swing low in June, going up here to the swing high on August, and ending with the swing low here on 24th of August. We've used the 78.6% Fibonacci projection tool. Let me just line it up a little bit better to make sure it's... Yeah, okay. So this projection level has helped us to identify a pretty strong resistance zone, which is actually where we saw price actually stall on 19th September and has faded, has dropped below it. Right, now that I look at this level much closer, we can see another intermediate resistance as well. Right, this intermediate resistance at 90.81. Let's just zoom in a little bit here. We can see that price failed to break above this level on 20th of September, 21st September, and of course on 22nd of September. So we do see a pretty strong case for a decent pullback resistance at 90.81. That's why we've identified this as a intermediate resistance with the first major resistance at 92.27. All right. Okay, so this is for oil, WTI oil. Let's see, anything else that I want to look at? All right. We've still got a few minutes left, so please drop your request for any analysis that you may have, whether it's the crosses, the indices, or any of the other majors. Please let me know now. So I'll be more than happy to go through it with you. Otherwise, we'll try and cover something else. Let's see what can we cover. Let's just do. All right, let's just look at the US 500. Right, so this tracks the S&P 500. So the whole of last week, we saw equity markets pulling back very strongly. All right. Okay. All right. For socials and stuff like that. Okay. Do take note. IC Markets does have a VIP trading room, channel room. So I would suggest to get in touch with customer service once again at IC Markets, because we do have a trading room where we update our analysis on a daily basis as well. So please get in touch with customer service from IC Markets and inquire on how you can be a part of the VIP trading channel as well. All right, that's where we post daily analysis on the majors, commodities, and indices, and you can also ask us questions as well. All right, Kelvin, you got a request for the Euro Kiwi. All right, so let's do that. Great, Euro Kiwi. Do I have it saved under any of my? Okay, no, I don't have it saved. Doesn't matter. Okay. All right, okay. So let's get rid of this. Let's see. Okay, this I'm on a daily time frame. Let's see. Right. So we can see back on 21st of August, Euro Kiwi making a wow, this is 3-year high. Yeah, pretty much a 3-year high. Right. So the last time price was trading above 1.80 was back in April of 2020. So that was almost more than 3 years ago. So you can see this is a major significant high for the Euro Kiwi. Right, okay, so we can obviously, this is the major swing high resistance on the daily time frame. Maybe you can set this as the second resistance, so then when we go down, we can try and find something else. All right, I also see. Right, so if you see here on 27th April, price making a significant swing high resistance. And again, you can argue on 29th of June, price came very close to this level again and got rejected. And of course, on 24th of July, it's very clear that price got rejected here. And then after price broke above it, it did find a little bit of support around 1.8, 1.80. So this is a pretty strong overlap level, and that's why I like to highlight this as the first resistance. And second resistance would be the swing high that took place at the end of August. Alright, okay, I think we can also do a Fibonacci retracement too, retracement to help us find this. Right, so using the retracement tool, going from this swing low here, 22nd of May, going up to the swing high on 22nd of August. Right, we can see price coming down to when it 50 is here. Okay, I think we can use 61. You can see price finding support around here as well, 61 and 78.6. Okay, we use 61 and 78.6% to help us identify the support levels. Right, so you can see here price making a pretty decent pullback at 1.76 at the end of July, which lines up pretty close to where the 61.8% Fibonacci retracement is. And we also see another decent pullback here that took place on 14th of June, where the 78.6% Fibonacci retracement level lies. And you can also argue in early July, price found support above this level as well before moving higher. Right, so this is how we've identified the second support at 1.74, which aligns with the 78.6% Fibonacci retracement. First support is at 1.76, which is the pullback level here that aligns with the 61.8% Fibonacci retracement level as well. And price is currently falling back down towards this level here. So this is where we can expect major support to come in. So if you have been shorting the Euro Kiwi from about 179, 1.79, this area here, this zone here is where you would be looking to exit the position, right? So I'll just highlight this here. So anywhere between, what is this, 1.77 to 1.76, oh sorry, 1.7745, okay, 1.7740 to 1.7680 is where you should be potentially be looking to take out or close your short positions, especially if you had gone short here, because looking at this here level here, this what was previously a key pullback resistance level then became a key pullback support level. So once you see price breaking cleanly below this, there's a potential bearish breakout. So we will be looking to short the Euro Kiwi here at about 1.7970 and then put your stop loss just above the first resistance, and you'll be looking to exit this short position in between 177.40 and 176.80. Alright, so that's what we have on the Euro Kiwi for the daily time frame. Or let me go into the 4-hour time frame and see if there's anything else. No, I think the levels that we've identified on the daily time frame should be more than applicable for the 4-hour time frame as well, right? Yeah, we can see. Oh, you can probably argue that okay, this is a intermediate resistance level, intermediate support level, right? If we zoom in a little bit, you can see price finding support here on last Friday, and should price break below this intermediate support, I think that it should trigger the next move all the way down to this support zone that we've identified here. Alright, okay everyone, thanks for tuning in today. If there's no other requests, we've come to the end of today's live analysis, and I just want to let you guys know, if any of you may have missed the pre-market analysis with Desmond this morning, I'm dropping the link here again so you guys can check this out, watch this at your own pace later today. And also do take note of let me go back to my slides. Do take note of the key economic events that are coming up this week. We've already had the speech by Governor Ueda and German IFO business come out today already. We've got ECB President Christine Lagarde speaking later today. I believe it's at 5 p.m. GMT, or is it 1 p.m.? I think it's 1 p.m. GMT time. Then we've got Australian monthly CPI. CPI data is expected to fall further, so that means inflation is fading in Australia. It's going to potentially act as a bearish catalyst for the Aussie dollar. We got US GDP on the 28th. We have PCE price index on the 29th and unemployment claims on the 28th. So PCE price index is the Fed's preferred measure of inflation. So if we see if the data shows inflation accelerating for this index, this is going to potentially act as a bullish catalyst for the US dollar once again. Alright, okay, we'll just round up with the ending disclaimer. Alright, so do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. Alright, thank you everyone for tuning in today. Do take note of the key levels that we've identified on the daily and 4-hour time frames today. And I wish you all the best in your trading journey. Alright, thank you everyone. Take care and have a great trading week.